Hello everyone, welcome to the channel. We had a very clear narrative building. If market opens flat, market will do drama, and it is better to avoid in case if market opens flat, and we will focus on something else. We will not worry about trading if market opens flat. Our ideal scenario would be if it opens pretty big gap up or if it opens pretty big gap down. This is what we discussed. Why am I saying in case if market opens flat it will be lot of drama? Is like, before even we step into that, in case if you are new to all the supply and demand concepts, earlier I also used to trade with support and resistance concepts. You imagine this as a wall. Okay, you hit the wall the first time. Whenever this wall is being hit by the sellers, buyers are stepping in, right? And second time this wall is being hit, buyers are stepping in. Third time the wall is being hit deeper, but not very deep as that of the first time. Buyers are still stepping in. Fourth time, sellers are hitting the wall again. Buyers are stepping in. Fifth time, the sellers has lost the control. You see the momentum of these candles, and this candle. This is coming with less selling pressure. So buyers take over control. This is how support and resistance works generally. This is how I used to trade. I see this 25,000 being a psychological support, and every time market fails to break and fails to sustain below 25,000 even in 15 minutes, I used to enter a call option here. But later, if you know about supply and demand concepts, this becomes much easier. Why am I saying this? See, why we discussed that we will not be worrying much if in case if it opens flat. We will discuss that point first before even we come into supply and demand concept. So market opened flat here, market came down, market went up, market came down, market went up, market came down. This is an expiry. So in an expiry, if this kind of moves happen, and if you are in the wrong side of the trade, even in if you have entered call here, your capital will be gone. If you have entered put here thinking market is going down and breaking 25,000, then your capital would be wiped off. By the small move itself, your capital will be gone. And again, if you had entered put here thinking again 25,000 is broken, again gone. This is why I always say you one simple rule: buy from a demand, sell from a supply. If you are entering call option, always buy it from a demand. If you are entering put option, always enter from a supply. This is why we study also, right? So having said that, how could we have planned our trade in case if we had wanted to trade today? How could we have planned? Let's do a small recap, and understand how we could have effectively planned our trade. See, here, before even market went up, right? I told in my last video that there is a last demand which is available here, right? And in case if market comes here, it has to give a break of structure, right? This is what we always do. So if you see here, market came to this demand and gave a change of character, which left us with this open particular demand. You see the small indecision candle before even market gave this change of character. This is how you should have planned your trade in case if you wanted to trade today. So the moment market comes back again here and gives a tap, you should have entered a call option here, keeping the very small stop loss here of this as your swing point as your stop loss, and you can keep the target as simple as this being your target. This itself is a 1:3 ratio, and market during expiry will do drama like this. But eventually your target will be hit, but it will take a lot of time. It will make you lose your patience. It will make you double think, because by this move you would be in profit, but when it comes back to your buying point itself, you will be having a huge loss because of decay. Even if you had entered 25,000 call option in this particular place, if you had entered at, for example, 100 rupees here, by this move you would have seen a movement of around 150 to 160 points, and when it comes back to this place, your call option would be somewhere around 70 to 80 points, not even close to 100. This move would have captured you more than that, I don't deny that. But Do you have patience to hold your trade at least till 3:15, that too on expiry? My answer is no. I would not hold it because it's very risky, right? So this is why I told, in case if it opens flat, let's avoid the market for tomorrow and let's focus on something else. Anyways, having said that, let's move back to 15 minutes. So we can very clearly see market is slightly turning into bullish. I'm not saying completely bullish. So our narrative, whatever we built on Friday, still holds. So what did we discuss on Friday? That if market opens pretty big gap down, then we are interested in seeing if we get a positive reaction from this particular demand before taking the market higher. And second thing what we discussed is, if market opens pretty big gap up and gives a 15 minutes closure, then we can see the target being extended to 25,672. This is what we discussed, right? So the same logic applies for tomorrow also. There's not going to be much change. There is liquidity on top, there is liquidity on the bottom also. There are relative equal lows also which are being formed in the market. There are a lot of equal and relative equal highs which is formed in the market. I want one of this liquidity to be either swept or hunted. What do I mean by swept? If market opens pretty big gap up, for example, tomorrow if I just open and show you SGX Nifty here for if I just refresh this, it is showing 25,469. There is a huge upward rally which has happened, right? If we take it as such, market is opening somewhere above this liquidity point, which is good for us. So we'll just monitor if this liquidity is being retested and given a closure above this. If market sustains here for 30 minutes, give time to market. If market sustains here for 30 minutes and if it is trading above the opening price, then we can easily try to take the market higher. Why am I saying this? Then this becomes automatic break of structure, and this liquidity hunt will even push the market higher. This gap will be filled later point of time when one of the supply is being hunted and sellers are stepping in. Till that time, this gap will remain open. Earlier gaps are also remained open, and we always see that the gaps will be filled not immediately but at a later point of time, right? So if market opens slightly gap down somewhere here, if market opens here, then this becomes little bit ideal for us for tomorrow. If I go back to 10 minutes, this has given a break of structure, right? And there are small indecision candle which we marked in 15 minutes time frame as a demand. So if market comes back here, we can see market, if we get a small 1 minute time frame confirmation like this, we can at least target till this particular equal high liquidity. Okay, so this can be a solid trade for tomorrow. But if market breaks this particular 25,000 psychological support or whatever support which people used to say, I am not interested in the downward direction till here. This move, let it be gone, it's fine. In case if market comes down all the way here and gives me a positive reaction, then I'm interested to take the market higher. This is what my total overall plan would be. I'm not interested to blindly enter the market just because some psychological number is being broken. Okay, so quickly summarize what and all we have discussed. Market opening flat and coming down, we will try a small call option here and keep 25,000, 24,993 as our SL, and try to take the market higher till 25,250, same as today's high or even higher. If market opens flat and goes up, we will avoid. If market opens pretty big gap up and sustains above this equal high liquidity, about 25,440 to be precise, for 30 minutes, then we will take the market higher. If market comes back below this liquidity point and sustains below this 25,000 equal high liquidity for 30 minutes, if it sustains below this, then we can try to take the market all the way back to this demand. So thank you so much for watching. We'll meet in the next educational video.